lasting increase in energy prices, the risk is to see higher wage pressures as well as the incurring of inflation expectation. Bearing in mind that the energy crisis, the 2022 energy crisis, is not far long ago. So households have in mind the sharp increase in energy prices. So in this environment, inflation expectation could be incurred at a faster pace than previously. So maybe just to acknowledge that indeed in this environment, upside risk on inflation have increased, and maybe just to make the parallel with the previous ECB central bank meeting, where the focus was on the resilience of the domestic economy with potential for private consumption to recover as well as private investment. With also this renewed focus on structural reforms and the large fiscal spending. So the starting point here for the Eurozone is in a recovery mode with inflation at target. So meaning that inflationary risk were there, and they have increased with the large energy increases.
If we turn to the Federal Reserve, what is the Fed likely to say, given that it's coming up to a point where, Fed Chair Jay Powell only has a couple of meetings left? It might be, just maybe a little bit more of a sensitive meeting than otherwise it would be. And now you have Iran on top of it, and that's a very, very political situation. In other words, no matter what Powell says about Iran, it could be taken as a political statement.
Well, indeed. And again, if we focus on the economic development in the US, so I was saying that the Eurozone economy, this conflict in Iran is happening when the Eurozone economy is recovering. On the opposite, it is happening when the US economy is slowing down. So take the recent figure that we had, Q4 GDP was revised down to 0.7%, mostly driven by domestic demand and private consumption, which is the main engine on growth. And at the same time, inflationary pressures remain. So inflation wasn't changed, 2.4% for the headline, 2.5% for core inflation, and inflationary pressures are very much there. So just maybe to mention one figure, that the share of imputed prices in the CPI basket has increased to 40%. So it's not an ideal position for the US. So clearly the economy is slowing down, at the same time inflationary pressure. So the view that we have is that the Federal Reserve should remain prudent. We don't expect any move for the Fed this week.
So Morgan Stanley, and a bunch of other banks out yesterday with notes saying that they're updating their expectations for the Fed this year. Morgan Stanley is looking for a 25 basis point cut, but not immediately. Citi still expects 75 basis points of cuts this year. I mean, are there really that range of possibilities in the next few months, Sabrina? And what's your assessment of the U.S. economy?
Well, again, it depends on the view that we have on the U.S. economy. We are on the camp that the Federal Reserve shouldn't cut as much as 75 basis points. So the view that we have is only one rate cut, and obviously this year. And again, it depends on the war in Iran, the duration, as we explained before, and the potential for inflationary pressure or the upside risk of inflation to increase.
All right, Sabrina, thank you so much. That is Sabrina Kanish, Senior Economist at Peak Day Asset Management. Coming up, NVIDIA forecasts sales will be $1 trillion through the end of next year. We'll have more from the company's biggest ever annual event. That's next. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe, and now to some corporate news. Morgan Stanley is warning that private credit default rates will hit 8% as advances in artificial intelligence continue to disrupt the software industry. Strategists at the bank say that while AI disruption is yet to impact private credit fundamentals in a material way, elevated leverage and looming maturity walls within the software sector may push default rates to levels not seen since the pandemic. Britain's Chancellor will use the annual Mace Lecture today to set out her economic vision, highlighting AI, regional growth and closer ties with the European Union as the biggest opportunities for growth. She'll say that Britain cannot afford to stand still and that she wants the technologies of the future invented, built and deployed in the United Kingdom. And staying with the UK, the government says it will spend more than £1 billion on quantum computing research over the next 4 years as it boosts investment into a technology that's increasingly considered critical to national security. The government is looking to encourage larger scale computers for public sector employees, academic work and commercial use over the next 10 years. Shares in Nvidia spiked in yesterday's session after CEO Jensen Huang predicted $1 trillion in sales from the flagship AI processors. He also unveiled a variety of new products and plans to push deeper into central processing units while addressing the company's biggest annual event.
I'm here to tell you that right now where I stand, a few short months after GTC DC, 1 year after last GTC, right here where I stand, I see through 2027 at least $1 trillion.
Let's get more now from Bloomberg senior strategist Neil Campling. I feel like Dr. Evil, back when $1 trillion was a lot of money. So, I mean, is it a lot of money? Put it into context for us. It's a few $100 billion, right?
1 trillion. It was that pause before he said the 1 trillion, I think, which is quite amusing. I mean, 1 trillion clearly is a very, very big number. I think the interesting part actually is we look back at where the street are. They're pretty much already there at $950 billion. But and some analysts have already got the 1 trillion. So maybe there's not the big increase that people have come to expect, and they've also come to expect these big statements from the CEO. I thought one of the interesting points was that he mentioned that the demand for AI compute had gone up 1 million-fold over the last 2 years, which is just a huge number in of itself. So there's some big numbers that are being banded around. He mentioned it's an inflection point for inference. He announced the release of 2 new whole product sets, Grok as a new chip that doesn't require GPUs, and also around the open core architecture as well that he mentioned.
Yeah, in a sense, you can predict as many sales as you want, right? But they have to come through at the end of the day. What's the danger that he's setting himself up for massive failure if a few of these big orders don't materialize? I mean, we're seeing Meta lay off 20% of staff in some areas. Well,
I suppose we're at a point where perhaps we're seeing the AI inference allowing for other companies to do more work with less employees, so there is that element to it. But there's also within the supply chain, they have to come out with these new products because they now have competitors who are better positioned than they were historically. So whether it's an AMD or a SoftBank ARM architecture or the Google system of these things called TPUs, rather than the GPUs, of course, because tech loves an acronym. So there are alternatives that are coming up in terms of the technology. So Jensen has to remain ahead of that curve. But as you say, there are some big promises here in big numbers. So we have to continue to deliver upside to all of those estimates going forward.
So these new products, Neil, I mean, it's hard to evaluate them, I guess. We haven't seen them. They haven't been built. But do they sound like they could be hits?
It does in terms of, you look at all the partnerships they announced. There's definitely a lot of interest in them moving into. You mentioned into CPUs, for example, that goes into Intel's core market. The deal with Uber in autonomous vehicles, another interesting one. So there's no guarantee of a hit, but clearly NVIDIA remains the benchmark that all else are trying to strive to become the next leader in AI.
The likes of NVIDIA be concerned about that?
Well, this is a key question, isn't it? In terms of, we've already had people say they think they're outsold for the next 1, 2, 3 years on these HBM for DRAM chips, for example. But actually, you know, the risk here is that because you haven't got the supply, or perhaps if certain components aren't available, then reaching those $1 trillion of sales or other big numbers could be a risk, because there's just not enough supply of the memory chips.
All right, I feel like we need a cat on the table for discussions like this, or maybe Jensen Huang needs a cat on like that without an animal. All right, Bloomberg senior strategist Neil Campling, thank you so much. Plenty more coming up. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's in China's self-interest to open the Hormuz. They would be the biggest beneficiaries of totally opening the strait. So I don't think it's so much a question of them doing us a favor. They need that strait open. They need that oil.
Former U.S. Commerce Secretary Wilbur Ross there, and that's as may be, but China also has a massive amount of oil just in reserves and has been building up for just a situation like this. That said, oil has been trading below its highs, right? Still, though, I mean, if you take a look at this chart, we're not that far below our highs, right? If we take a look at WTI, we're still trading just $3 below $100, and we topped that earlier this morning. In fact, we saw a 4% gain just in the last hour alone in oil before it pared some of that back. So this trade is really the trade of the moment, because it's as oil goes, so goes the S&P 500, so go European stocks for the most part, so go treasuries. It really is this trade that's dictating everything. So let's take a look at the next chart. Other countries obviously suffering intensely, and it's not China, like Wilbur Ross said. It's all these other countries like Indonesia, like India, countries that have had to intervene in their currency markets in order to make things work for their economies. And even then, Indonesia has erased years of gains at this point in its stock market. I mean, it's really been thrown back into, like pre-2021 time periods, basically, if you see what's happening here. And that is because of inflation, and, this oil spike is not helping things in the slightest. And then let's take a look at the Aussie dollar, because, of course, we got that RBA hike. It was the second in a row. The market was pretty much anticipating it. What it perhaps wasn't anticipating was how much there was non-consensus on the board, right? It was a 5-4 decision in order to hike. So you can see the Aussie dollar right now, it's unchanged, because the market was expecting that 25 basis point increase. But it was really fascinating to hear what Michelle Bullock had to say about the secondary effects of inflation thanks to the war, and what that might mean for the Federal Reserve and for the ECB, of course, and what they might say when asked questions about inflation and the war. And again, a quick check on oil: 104 basically for Brent and 97.50 for WTI. Your risk events then today at 10 a.m. UK time, we get the German ZEW survey, expect a deterioration. 12:15 UK time, we get ADP unemployment out of the United States, and then Volodymyr Zelensky is meeting Keir Starmer as well. Coming up, the CEO of Commerzbank will be on the opening trade at 7:30 London time to discuss that UniCredit €35 billion bid to increase its stake. The opening trade is next. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. It is Tuesday, March the 17th. Here is what is on the agenda. Oil up again as Iran targets energy infrastructure. Trump's China trip gets a rain check, and Nvidia's $1 trillion sales target.
Tom, good morning. Welcome to Tuesday. We've got futures lower on both sides of the Atlantic this morning as we see oil climbing higher. Brent just shy right now of $104 a barrel, responding to those Iranian attacks on energy infrastructure. And once again, we've got the Bloomberg Dollar Spot Index climbing this morning, a raft of central bank decisions to come, and already a Reserve Bank of Australia rate hike, a back-to-back rate hike in the bag. The countdown to the opening trade starts right now.
Good morning. It is Tuesday and oil is gaining once again. The dollar is bid, and this is what is important then for the markets and for global economies. Until and unless the US can prove that the Iranians are unable to target infrastructure in the Middle East and that the Straits of Hormuz can reopen, then the volatility, the uncertainty and the economic pain will be there, and the response from central banks this week will be central. We've had a reminder of Iran's continued ability, Lizzie, to attack infrastructure in the region, despite President Trump and the Defense Secretary coming out and suggesting that the Navy of Iran, that the Air Force of Iran, that the missile capabilities of Iran have been significantly eroded. Iran is proving once again it can target infrastructure in the Middle East. And it is once again proving that the Straits of Hormuz are essentially closed unless you are an ally or unless you are Iranian crude. So just an update in terms of the infrastructure impact. The Shah gas field in the UAE has been targeted and suspended in terms of production there. A port at the UAE has been targeted again as well, and a southern oil field in Iraq has been targeted. Kuwait, meanwhile, has reduced oil output further along with the UAE. JP Morgan putting out a note saying that increasingly, when it comes to the Strait of Hormuz, it will be increasingly conditional on political affiliation with Iran. There have been some Iranian shipments and transactions through the Straits of Hormuz in terms of ships crossing, Iranian ships. We know that China, India and others are in conversations with Iran. Interesting in terms of how that could play out in the weeks and months ahead.
JP Morgan saying you've got to basically be friendly with Iran if you want to get through the Strait of Hormuz, but it is that reopening of the Strait of Hormuz that is the key to bringing down the oil price, and it does not look forthcoming at the moment. You've also, as you say, got oil higher despite the IEA saying it has even more reserves that can be made available on top of that record release that we have already seen recently agreed. President Trump, meanwhile, looking for allies to help him reopen the strait, but he isn't getting it. Other allies not forthcoming here. He said that NATO members had lent on the US for tens of billions of dollars in protection, but failed to act when he needs them. So you've got Japanese officials saying there are no plans to send escorts, not what President Trump wants to hear ahead of Takaichi's visit to Washington on Thursday. Then you've got the UK not willing to commit to a full naval mission, saying it won't be drawn into a wider conflict. And perhaps the bluntest message from Brussels, foreign ministers meeting there yesterday, stressing they don't want to escalate the war. And Kaja Kallas saying that Europe is not part of this war, we have not started this war, and the political objectives are unclear.
Gas prices in Europe right now up just 2%, as HSBC says that European natural gas prices will be about 40% higher than previously projected for 2026 and will be higher as well in 2027. That is inflation dilemma then from central banks that, of course, come through with decisions and commentary through this week. And we have a suggestion in terms of how long this conflict is going to continue with President Trump's push to delay that summit with China.
Yes, this is perhaps the most important of the international response. President Trump saying that he's delaying that summit for about a month because he needs to stay in Washington to oversee the war. Now, you can ask, to what extent is this punishing Beijing for not coming to the aid of Washington to reopen the strait? The Global Times, China's state-run Global Times, dismissing the idea that China should help to protect the strait as Trump's attempt to spread the risk of, quote, a war that Washington started and cannot finish. Look, there is a serious question here. If you send Chinese ships out to the strait and they're hit by Iran, what happens? You know, would China join this war?
There's just very, very little sense that China is getting anywhere close to putting its ships in and through the Straits of Hormuz, whatever the Trump administration might say. The Trump administration is saying this is not about leverage. They're trying to come out, Scott Bessent, saying this is not about leverage. This isn't trying to pressure China in terms of its response around the Straits of Hormuz. It is a logistical question. And President Trump making similar comments yesterday. He says he feels he should be in Washington as this conflict continues. But that is what is so important, I think, is the time frame. This meeting, this summit in Beijing was meant to be happening between the end of March the 31st, to April the 2nd. It suggests that President Trump thinks this conflict could still be ongoing around that time frame, which aligns with what the poly market and the betting markets are suggesting as well. This has further to run, and this is the sense you're getting from the Trump administration.
And the longer this Trump-Xi summit is pushed out, how much more does China ask for in terms of trade? Because we know that the lower level officials have been meeting in Paris, China urging the US to remove unilateral tariffs and other restrictive measures completely. So is it actually to Beijing's benefit in that sense on trade if that summit is pushed out?
It's worth reflecting on the fact that US markets ended high, European markets ended high yesterday as well. One of the catalysts in the US was the semiconductor trade on the back of NVIDIA, and for a brief window of time, at least 2.5 hours, the market, at least many market participants, were focused on what Jensen Huang had to say, of course, at this key annual event for NVIDIA, and projecting sales then, Lizzie, of $1 trillion by the end of 2027. They had already projected half of that by this year, 500 billion by the end of this year. So it's essentially a doubling that, but that $1 trillion number really capturing people's attention.
Yeah, and unveiling a load of new products here as well, pushing deeper into Intel's home turf. So you've got central processing units, new semiconductors made with tech that NVIDIA's acquired from Grok, this startup that it had acquired. So shares, as you say, up nearly 5% in trading yesterday, though, pairing those gains. You've got various other businesses who got a name check as well. Uber, on the announcement of the robo-taxi partnership, that's to launch globally across 28 cities by 2028. Their shares were up as well. But watch out for the European read across this morning. We'll keep an eye on chip stocks at the open.
Yeah, absolutely. This is an event, of course, where you get the shout-outs from Jensen Huang and stocks move on the back of that. We've certainly seen that over in Asia with companies like Hyundai, who was mentioned alongside Samsung as well, with their HBM memory chips tying into NVIDIA. So we'll watch, as Lizzie says, the read across in the European session from the news coming out from NVIDIA. And that conference, of course, continues today. Let's tell you what else is coming up on the show today. Bettina Orlopp, Commerzbank's CEO, in conversation with Anna Edwards. Make sure you stay tuned for that conversation, of course, on the news yesterday of that bid coming through from UniCredit. Kim Crawford, JP Morgan Asset Management Global Rates Portfolio Manager. We'll get Kim's views on how central banks may react and how to position in terms of fixed income as well. Jeffrey Yu, BNY Senior Market Strategist, with his views on how to position around the geopolitics and central bank action of this week. And Emily Ashford, Standard Chartered Bank's Energy Research Head, an important voice in terms of how we think about the continued disruption as Goldman Sachs said refined products will face the most pricing pressure going forward, Lizzie.
Let's take a look at what else we're watching throughout the day. At 10 a.m. London time, we have the German ZEW survey expectations. At 2 p.m., the US Conference Board leading index. Before at 4 p.m. London time, we'll have NVIDIA's Investor Day. Jensen Huang, the NVIDIA CEO, giving a press conference at 6:30 p.m. London time. And then later on, President Donald Trump is hosting the Irish Taoiseach, Micheál Martin. Of course, it is St. Patrick's Day, Tom, so we have both dressed in green appropriately.
Yes.
But look, the main highlight, I think, for markets out of those data points will be ZEW, a deterioration expected. And of course, it comes ahead of the ECB decision on Thursday. A hold expected there, but markets betting on 1 or 2 hikes this year.
Which is a remarkable shift. Again, I mean, we've seen this come through in the last couple of weeks, but that shift from just 2 weeks ago in terms of pricing around the ECB. You're right, the focus on the German data, the fiscal spend is still there for Germany, but the ECB's single mandate around inflation, of course, will be central in terms of what we expect to hear from ECB officials through this week. But that data, in terms of the revival, we had started to see some examples of green shoots for Germany. What is the ZEW survey going to tell us about the momentum and the mood in Germany as those constraints come through? Fiscal spending, yes, but of course the inflation impact as a result of the geopolitics and the constraint potentially on growth as well. Here's what else you need to know this Tuesday morning. Morgan Stanley is warning that private credit default rates will hit 8% as advances in artificial intelligence continue to disrupt the software industry. Strategists at the bank say that while AI disruption is yet to impact private credit fundamentals in a, quote, material way, elevated leverage and looming maturity walls within the sector, the software sector, may push default rates to levels not seen since the pandemic. Germany's government has dismissed a potential hostile takeover of Commerzbank by UniCredit as, quote, unacceptable. The Italian lender made a €35 billion bid for UniCredit on Monday. The German government is Commerzbank's second biggest shareholder. Chancellor Friedrich Merz said the Italian offer was first and foremost a matter for the two lenders, but reinforced his government's stance that Commerzbank should remain an independent entity. And Australia's central bank has raised its key interest rate for a second straight meeting, taking the cash rate from 3.85 to 4.1%. The vote was split 5-4, with Governor Michelle Bullock saying the differences in opinion came down to timing rather than direction.
The things that all the members agreed on were that inflation is too high, that there are still inflationary pressures from excess demand in the economy, and that inflation expectations, we need to make sure they're anchored. Where the difference was in the timing. The members that voted to hold were voting to hold in a hawkish sense.
Okay, the RBA then lifting rates for the second straight time, but that split certainly caused a mixed reaction, Lizzie, from investors and from analysts looking and passing the next steps. It seems that markets still pricing in another rate hike from the RBA, but it was the split that some read as modestly dovish, others saying no, this is still a central bank that is moving higher on rates given the inflation tensions in Australia.
Yeah, the hike was expected, the vote split was not.
Yes.
And you have seen the Aussie dollar paring some of its losses as Michelle Bullock spoke there. It was quite a bullish delivery of that hike from her. But as you say, she says the decision doesn't imply anything about the future path for rates. Traders kind of brushing that off. A 60% chance now of another back-to-back, a follow-up hike in May.
Kim Crawford of JP Morgan does not think that the RBA is a canary in the coal mine, because some have suggested that it would be the first central bank, of course, to react post the start of this conflict in the Middle East.
And indeed, that's just one of the conversations we'll be having on the show today. But coming up, we'll be speaking to Bettina Orlop, the CEO of Commerzbank, after that takeover bid by UniCredit's Andrea Orchel. That interview at 7:30 a.m. London time. Plus, President Trump gets a chilly response from European allies as he calls for help securing the Strait of Hormuz. We'll go live to Brussels for the latest reaction there. But up next, we'll be joined by Peter Kinsella, Head of UK Investment Services over at UBP. If you've got any questions of your own for our guests, please do send them to us on IB+BB TV Go. Good morning from London. This is Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We strongly encourage other nations whose economies depend on the Strait far more than ours. You know, we get less than 1% of our oil from the Strait, and some countries get much more. Japan gets 95%, China gets 90%. Many of the Europeans get quite a bit. South Korea gets 35%. So we want them to come and help us with the Strait.
President Trump speaking there, reiterating his appeals for other nations to help secure the Strait of Hormuz. The president's comments coming as the war continues to roil energy markets after Iran stepped up its attacks around the Persian Gulf, further hampering the outlook for global fuel supplies. Let's bring in Bloomberg Horizons Middle East and Africa anchor Jumana Basetchi now. Good morning, Ju. We're looking at oil here rising past $104 a barrel on Brent, further rising after these Iranian strikes on energy infrastructure. What's the latest in the region?
Yes, so another active night of interceptions over here in the UAE. And what's clear is that Iran is expanding the scope of the energy infrastructure sites that it's been hitting. The latest being the Shah gas field. This is a sulfur gas field in the UAE. It accounts for about 5% of the total gas supply. 20% of the total gas supply for the UAE, about 5% of the total global sulfur gas supply. So yet another very important strategic site that they've attempted to target. There was a fire there. It's been put out, but it seems as though operations have been temporarily halted. There was also another fire reported at that Fujairah port. It seems that the operations resumed, but in a limited capacity. But again, this would be the third attempted strike on that key strategic port on the Gulf of Oman. And of course, you know, we flagged the importance of it in terms of refueling and also its strategic position outside the Strait of Hormuz, and the fact that a lot of the land ship oil has been passing through that port as well. So significant from that perspective. And then Saudi Arabia also intercepting a huge number of drones being directed at oil fields in the east, and then Iraq also being susceptible to attacks on one of the oil fields there. And so putting all of this together really just goes to emphasize that Iran has expanded the scope of what it's attacking, and now it's really going after the physical energy infrastructure, not just allowing for, you know, a limited number of vessels to pass through the strait. And the reports over the last 24 hours suggest that they have allowed about a dozen vessels to pass through. Those are Iran-linked vessels, but now really increasingly going after upstream energy sites alongside some of those key logistic hubs too. And our latest reporting suggests that, you know, many of these key Middle East producers have had to rethink their production. There are significant production cuts that have already been announced, something between 1.5 million to 3 million, depending on the producer. And the longer this goes on for, of course, then there becomes concerns about how long it will take to restart the production facilities if things return back to normal. The longer they stay offline, of course, it becomes more difficult then for things to get back up and running. At the same time, President Trump doesn't seem to be having a lot of success in terms of building that coalition of nations to help him reopen the strait by force or bring in other countries to provide naval escorts, which means for the time being, Iran is maintaining its leverage over the strait and, as you just highlighted, continues to target energy infrastructure in the region.
Okay, Bloomberg's Jumana Pasechi on the ground for us in Dubai. Jumana, thank you for that update. And to your point, as we see Brent at 103.66 right now, up 3.4%, 4% gain for WTI at $97 a barrel and 20 cents. Let's bring in right now for a broader market take Peter Kinsella, Head of Investment Services at Union Bancaire Privée. Peter, good morning. Thank you for joining us. So risk aversion again. We had some modest gains yesterday in the equity markets. The dollar saw a bit of downside yesterday. Today that is reversed. It's risk aversion back on the table for these markets. Is the greenback still the cleanest way to play that risk aversion story?
At the moment, yes, clearly. I think what we're seeing are two things. First is one of simple positioning changes. When we came into March, investors are broadly speaking short the dollar, and so any natural risk reduction moves at a portfolio level tends to benefit the dollar, and that's exactly what we're seeing at present.
Have all those shorts been washed out right now?
No, not by any means. So there's definitely more to go, but that's really a question of how long this conflict will last. And what we're seeing today, what we've seen yesterday, it appears to be more protracted, and hence so there's probably a bit more scope for shorts to be reduced, thus benefiting the dollar.
I mean, there are many ways you could define the end of this war.
Yeah.
It could be President Trump declaring victory, or you could say it's the Strait of Hormuz being reopened. But let's say it is the Strait reopening. How much then would the dollar fall? That's a question then. I wouldn't say massively, because in a sense what we're seeing kind of elsewhere around the world is that if you look at the front end of curves in Europe, in the UK and elsewhere, we've kind of priced out rate cuts and even priced in rate hikes, particularly in the ECB. So, you know, the extent to which the dollar can fall will also be predicated upon, you know, the monetary response of other currencies. I think that it'll take the structural case for, you know, a bearish dollar stance still very much in play, but the cyclical drivers we have at present are clearly conducive to a bit more of a dollar constructive outlook. I think if we look at the rise in the oil price, that's effectively a terms of trade shock to the likes of the Eurozone, to Japan, to all of the energy importers. And the moves that we're seeing in those currencies at present are entirely consistent with what we would expect from a terms of trade shock like this. It was interesting. At points yesterday, you would see oil gaining, but traders trimming bets on ECB and BOE rate hikes. Does that say to you that this market is increasingly concerned about growth rather than just the short-term hit from inflation?
I think the longer it goes on, the more it will be, yes, no question. I mean, if you look at the PMI data, broadly speaking, in Europe and around the world, we were beginning to see the emergence of a kind of a synchronized upswing in the last several months. We'll have the ZEW data today. We'll see how that looks. But certainly I think this is going to be a hit, right? Because if you look at even European manufacturing, European industry, it's barely recovered from the 2022 shock, and here we are back again with higher oil prices and yet again. So it's definitely a problem.
Do we get to parity on euro-dollar?
In the short term, no. I think what we see present is a terms of trade shock. The parity trade in 2022 was really a balance of payment shock. It was related to obviously huge rises in gas prices, massive rises in oil prices for a very prolonged period. We're not in that situation now. The longer this goes on, yeah, we could be, but it wouldn't be my base case at the moment.
If those rate hikes that markets are pricing in for the ECB come to bear, how supportive of the euro is that?
Not very. I think the issue really is that the balance of payments effect will take precedence and the interest rate differential will come as a secondary issue. So I think we've already priced in. If you look at the two-year swap spread, that's definitely already priced in, a slightly stronger euro. However, it's not happening given what you're seeing on the balance of payments and terms of trade. So those two effects take precedence before you see the interest rate differential kicking in.
Before we get to that point, we're expecting holds across the board. We've had the RBA already with its back-to-back hike, but the other central banks, the big ones, expected to just stay put. Will there be much market reaction? I mean, you wonder how hawkish central bankers would want to sound. They won't maybe not want to. Might not want to disappoint the market, but they might not want to egg it on either.
I think the job of a central bank at a time like this is not to make a mistake. Right, and that's the principal job, is not to scare the horses, it's not to make a mistake. And so what you'll do is you'll stay on hold, you'll give guidance insofar as you can, you'll say, look, as long as this is protracted, you know, hawkish stance, if we get a reversal, fine, we'll focus on growth.
But Peter, it could be a policy mistake in itself to be behind the curve as we learned just a couple of years ago, right?
Yeah, the starting point is different, though. We're starting with much higher rates now than we were in 2022, and I think that's a really important distinction. The secondary point really is that this is a much wider shock. It's not just a European energy story. It's a much wider global shock. And, you know, you're seeing dislocation. It's not just in the oil industry. It's across the petrochemical industry. And the downstream effects of that have yet to be seen and fully appreciated.
Do you think the markets will take Jay Powell seriously, given that he's coming to the end of his term, particularly if he's hawkish and we're expecting a new dovish head of the Fed?
Yeah, I mean, look, it depends what the committee is saying, right? And if the broad committee are still in track with Powell, and he seems to be quite centrist on that committee, I think they'll continue to take him seriously. Whether we go and we take what Warsh is saying a bit more seriously, we'll have to see. But I think it's really the committee view at the moment which takes precedence.
Do you have a view on, Peter? I said quick because I've got the producer here telling me to wrap up fairly quickly. But one last one then, Peter, on the pound.
Yeah.
Does the BOE have to be carved out as a separate issue, given the economic challenges that we face here and the stickiness of inflation that maybe is certainly not as acute in the US? And slightly different over in Europe. How are you thinking? What's your view on the pound?
I don't think the pound will do a lot. If you look at the pound, it's not been doing a lot, right, either against the euro nor against the dollar. For the BOE itself, look, they've got much lower levels of inflation. But if you look at the 5-year break-even, it's really gone through the roof in the last couple of days. So the market's saying they're expecting much higher inflation pretty soon in the UK. Whether that comes to bear or not, again, is simply a reflection of how long this crisis is going to last. But for the BOE, I think, look, they'll likely stay on hold. I would if I was them.
Okay. $1.33 is where we trade on cable, down 0.2% on the flip side of dollar strength. Peter, as always, a pleasure to see you this morning. Peter Kinsella, Head of Investment Services over at Union Bancaire Privée. Well, coming up on the opening trade, we're going to be speaking to the CEO of Commerzbank, that, of course, following UniCredit's hostile takeover bid for the German bank. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Revenue, for example, and Nuvia. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth we've started with by empowering our customers across all our segments?
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
30 minutes away from the start of the opening trade, we have futures pointing south on both sides of the Atlantic this morning by about the same amount. Euro Stoxx 50 futures down 0.4%. Once again, the FTSE set to be cushioned by its exposure to oil and energy. Brent is higher at $103 a barrel now. On Iran stepping up its attacks on energy infrastructure, but oil paring its gains just a touch, Tom. So a mildly risk-off session expected this morning.
Let's check in on European bonds then, trading right now. We saw slightly move higher in yields across the Treasury curve. In terms of the European debt picture, 2.94 right now on the benchmark German 10-year bond, largely unchanged as you can see. OATs over in France yielding 3.61 and BTPs over in Italy also unchanged at 3.72 on a big week, of course, for the central bank. So maybe there's a bit of standing on the sidelines until we hear more from the ECB.
Well, let's turn now to the banking story in Europe. Germany's government has dismissed a potential hostile takeover of Commerzbank by UniCredit as, quote, unacceptable. The Italian lender has made a €35 billion bid for the Frankfurt-based bank, and we can get more now with our Anna Edwards. Hey, Anna.
Good morning, Lizzie. Good morning, Tom. Yeah, busy week for central banking, busy week for geopolitics. Add into the mix some attempted cross-border M&A in the European banking sector. I'm very pleased to be joined today by the CEO of Commerzbank, Bettina Orlopp, who is in London for a conference and speaking to us this morning. Bettina, very good morning to you. Thank you very much for joining us. So, the recipient of an offer, a takeover offer from UniCredit. What is your broad message to shareholders this morning?
Yeah. Good morning. So let me say three things to begin with. First, it was a surprise to us, as to everybody else. The takeover offer, it was not pre-aligned, and more surprising, I would say, was then that this is an offer at a very low price if you compare it, for example, to our target price of €37. And it's apparently also not meant to take control. So that's surprising. Second and most important is that, to bring us to the table to discuss, it's not necessary to do a takeover offer, because we repeatedly, and I repeat it again, we said that we would be absolutely willing to sit down and to discuss a proposal made by UniCredit, but there is no cornerstones of a draft or something like that available yet, and we think that it's also in the interest of our shareholders to ask for that. We really need that to judge: is this value creating? Is it not value creating? How can we do it? And that is important. And thirdly, as long as we do not have that in front of us, we do what we can do best. Act in the interest of our stakeholders, to start with the shareholders, and implement our momentum strategy. We do that very successfully, and we are currently thinking about accelerating the profitabilization, and that is in interest of all shareholders, including UniCredit.
Okay, so you as yet have seen no details of this offer then. And in the meantime, you reiterate your commitment to your standalone plans. You've outlined that the offer is not much in the way of a premium, 4% premium, I think, to Friday's closing price. So would you expect most stakeholders to reject this? Is there any possibility that anybody is interested in this kind of offer?
Well, that is something the shareholders need to decide on. What we need to do is to evaluate whether such a transaction can be value creating or not. And this is why we are saying, let's sit down. We said that all the time as well. Let's sit down, let's find out whether we find common grounds, whether there is a value creating transaction, and then we can do a recommendation to our shareholders. But we expect, given that UniCredit is the one who have advanced, to put something on the table, and
Yes.
this is still something we're waiting for.
Why do you think there has been no detail up to this point, and so no talks have taken place, and instead we find ourselves in this quite technical situation?
Yeah, I don't know. I mean, that is a question clearly to be directed to UniCredit.
It seems, and again, you aren't privy to UniCredit's thinking, I'm sure, but from where we are now, it seems that UniCredit could end up amassing shares in Commerzbank up to 50%. Do you have any expectation as to whether that is going to take place? Anything that could stop that from happening?
Well, I mean, first of all, it's a technical process going on in the moment, and it's up for the shareholders to decide on how they want to proceed. And I mean, we said that also from the beginning on. This bank, Commerzbank, is owned by its shareholders, so they have the final say. The only thing what we need to do and make sure as a management team that first of all we protect the value of the bank for the shareholders, for the clients, but also for staff, and that we make sure that everything happens in this direction, and that we keep the bank stable. And that's where we are up for, and this is why we think that now is the time to probably discuss confidentially, but put something in front of us.
Okay, so waiting to hear from UniCredit on that front. Have there been conversations about UniCredit having a board seat? I mean, they're already a 30% shareholder. Would there be arguments in favour of that?
Well, no, we don't have. It's also a decision which is with the AGM. So that is something, a proposal normally, and it will be decided by the AGM. We also only have the public statements of UniCredit that so far they were not seeking for a supervisory board seat, so that's all what we have. We also know that there's nobody up for election or re-election this term, so that is more a topic most likely for 2027.
Okay, UniCredit has said, Andrea Orcel has said, that he sees this as a way of creating space for constructive dialogue with Commerzbank. Is that where you see this heading next?
Well, the thing is that we had the basis and the space for constructive dialogue all the time. And it's just the case that to discuss if someone has something in mind and wants to talk, then normally you come with something as a basis for discussion. And this is still, out there.
Yeah, so you have to wait to see what that says. Do you understand the government's objections? Do you see any format that an offer could take that would meet the government's criteria of an independent Commerzbank?
Well, I mean, the government is also a shareholder, so they have the same right as everybody else to ask for certain things. And I think it's pretty clear that if you do such an endeavor, you need to find out what the price is, what the synergies are, how the integration could look like, what the governance setup is. One should not forget that a combined unit would have the largest market would be the German market, actually. And also things like social rights, stakeholder interest, that are all things which would be pretty valid to discuss, and I have to say it would be in private first, and to see whether there's some kind of alignment, and if so, then we would move forward.
Would you see this, Bettina, do you see this approach as welcome outside interest, or is this just a big distraction, a very busy time for the banking sector, a very busy time politically, geopolitically around the world with a lot of moving parts?
Well, I mean, that is now our task, our challenge also as a management team. There's so much going on, and our most important task is to be there for our clients, to keep the bank stable, to further accelerate our profitabilization, and that is what we need to focus on. But besides that, we also take care of this matter.
Okay, Bettina, thank you very much. Thank you very much for your time. Bettina Orlopp, the CEO of Commerzbank. Tom, Lizzie, back to you.
Anna, really, really important conversation with the head of Commerzbank on the back of that news yesterday in terms of UniCredit trying to make that bid for Commerzbank. Really interesting. So Bettina Orlopp saying that this was a surprise, saying that the price wasn't right as well. We talked about that 4% premium versus the close on Friday. She described the offer as a very low price, saying it was surprising that the offer came through, but not ruling out having a conversation with Mr. Orchel and the team at UniCredit. She wants to see a detailed proposal. She wants them to come down and sit down with her and the team to see if they can work something out. And she says, according to her telling, Bettina Orlopp, that hasn't happened so far.
She seemed a bit baffled to me as to what UniCredit was playing at with this. You know, saying we've repeatedly said we'd be willing to sit down and discuss a proposal. Not sure why this was necessary. The proposal, in my words, not hers, wasn't one that had a lot of meat on the bones. So, as you say, willing to talk when there's something to talk about, but not much scope for UniCredit to get a board seat in 2026. And Bettina Orlopp there, knowing she can't do much about UniCredit buying up shares, except focusing on accelerating profitability. Well, so thank you to Anna for that interview. We also have been hearing from the NVIDIA CEO, Jensen Huang, and he's still bullish on AI demand.
I'm here to tell you that right now where I stand, a few short months after GTC DC, 1 year after last GTC, right here where I stand, I see through 2027 at least $1 trillion.
We'll take a closer look at Huang's comments from the company's biggest ever annual event later on in the show. Stay with us. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Now, most of the world's biggest central banks are due to announce rate decisions this week against a backdrop of heightened volatility driven by the conflict in the Middle East. Surging energy prices have intensified upside inflation risks, complicating the policy outlook. Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management, I'm pleased to say, joins us now. Kim, good morning. Just in terms of the ECB, you've had markets really quite aggressively repricing the rate path here. Is it even possible for Christine Lagarde to sound more hawkish than what's already priced in?
No, you make a good point. They're almost pricing in 2 hikes now for the ECB this year. We think they've almost overshot it now. It's just, we see many different paths for the ECB not to hike this year still. So if I just map that out, if the energy crisis lasts for another few weeks, they don't need to hike. I think if it lasts for another few months, but growth also dampens at the same time, again, they don't need to hike. And then finally, if it lasts again a few more months, but you have a bit of government support come in to fill some of that growth gap, not all of it, but some of it, and also smooth out the impact on inflation, I think they don't need to hike as well. So I'm not saying there's no path to a hike. There's definitely a path to that outcome. But I think given markets are now pricing in nearly 2 hikes, they've gone a little bit far.
So when you contrast that to the Bank of England, is there the fiscal space to give that support? But also you have the weak growth, right? So is the BOE actually even going to cut? Is there even room for that?
Yeah, so I think the Bank of England and also the Fed actually are just in a different place to the ECB. It's going to be harder for them to have to hike because they're still in restrictive territory. They're both seeing weaknesses in their labour market to varying degrees, but weakness nevertheless. But I think today they're going to have to sound really cautious. Even though they've got a weak growth picture and a weak labour market picture in the UK, sounding too dovish in the light of this uncertainty and these reflationary risks, just risks entrenching that inflation. So I think they'll keep the path open. I don't think they are going to need to hike, but it certainly delays that disinflation progress and pushes those cuts further out.
Does that suggest then, and good morning, that you think there may be a buying opportunity in gilts at this point?
I think so. I think that it has to be right sized for the political uncertainty that we're still looking at and also the market volatility. But I do think, especially in the front end, we're getting to that overshooting territory. It's quite the same, though, across the globe, be it the Fed, the ECB and the bank, in terms of how much has already been priced out by markets.
OK, so you can kind of you have optionality in terms of where you're looking if you want to lock in yields at this rate. When it comes to the Fed, I am curious in terms of the backdrop for Jay Powell of the end of his term and the fact that a more dovish Fed head is expected to take over, and to what extent the markets are going to be pricing in whatever he says, Jay Powell, given that backdrop. How complicated is it for the head of the Fed at this point?
I think complicated, but he's going to have to stick to being the chair at the moment, deliver that strong message, keep inflation expectations under control. I also think with the backdrop that we're looking at, Xauusd coming in at his first meeting and trying to cut then could also be more problematic for markets than helpful, given where inflation is.
Is that your expectation at this point?
Yes, I think coming in and doing a cut in the first meeting, if inflation is where it is today and labour markets are kind of here, so not weakening aggressively, but you're getting that gradual lift in unemployment rate, then I think that would be too soon to signal something that meaningful.
But it's still the case that if oil stays elevated, Fed cuts are just delayed, not derailed.
Yes, I think definitely delayed rather than derailed. But I make an important point that this really isn't 2022. So the market environment is really different. In 2022, we had those disruptions to energy supplies coming at the same time that the world was just reopening. So that came with its own bottlenecks, remember, in shipping, in factories, and services. The backdrop fundamentally was also very different. So now we have inflation significantly lower across major economies, the labour markets are looser, and also the central banks have already hiked rates substantially. So I think, it's naturally going to be at the forefront of everyone's mind, 2022, but it's just not 2022.
Just coming back to gilts, are we not forgetting the political situation in the UK? We've still got those May elections.
Kim mentions political risk.
Yeah, you did, but, we've got those local elections coming in May. Surely it's the geopolitics just kind of distracting us a bit from the reality of the situation here in the UK.
Yeah, well, I think if you look at gilt valuations, for example, if you look at where the 10-year yield is trading versus Germany already, I do think you've got political risk premium priced in.
Right.
Markets are aware of it. We were all talking about it already in